What's going on, guys? Welcome back to another video. In this video, I've got another pretty interesting AMC update for you guys. We're going to go over a potential gamma squeeze coming into the end of this week. We're going to go over in depth in the most simplest way possible, explain exactly what a gamma squeeze is and how it could affect the share price of AMC going into the end of this week and into the beginning of next week. We're also going to go over the new utilization, short interest numbers, the short borrow fee rate, and the available shares out in the market to be shorted. Now, I'm going to debunk a couple of things that I have seen out on the internet. A lot of people are acting in good faith with the information that they have, but I think a lot of people are slightly misinformed in what these numbers on some of these different data platforms actually mean and how you are supposed to interpret them. So we're going to go over all of that throughout this video. And as you guys can see here, I'm recording this video the night before. So AMC on the day that I recorded this was up 5.77%, and after hours it went up 1.71%. But the information that I am going to go over is mainly just explaining what is going on, so the information is not really going to change, and the most important thing we are going to cover, in my opinion, is going to be this potential gamma squeeze. So before we get into all of that information, if you guys would like to earn 2 free stocks with Webull, which is the brokerage that you guys see on screen in all of my videos, these 2 free stocks are valued up to $1,850. All you have to do is check out that link down below in my description, sign up for an account, deposit over $100, and you get those 2 free stocks. Now, this is also a great way for you guys to help out and support the channel if you guys would like to, because when you get 2 free stocks, I get a free stock as well. And if you enjoy the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps me out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So a gamma squeeze has to do with options, so it is slightly separate from a short squeeze. So what happens in a short squeeze is that a stock becomes super heavily shorted, and then if the share price starts to run up, the individuals who have shorted the stock that they do not own, so they have sold shares of stock on the open market that they do not own, have to buy back those shares at a loss at a higher price, which is going to continuously push the share price up. Now, something similar is going to happen with this concept that is called a gamma squeeze, but first I want to make sure all of you guys understand exactly what options are, because I know some of you don't, and they could seem pretty complicated. So a call option in its simplest form is the right to buy 100 shares of stock at a certain price on or before a specified date. So you are agreeing to buy 100 shares of stock when you buy a call option at a certain price on or before a specified date. Now, these are American options. In European options, you are only able to exercise your actual options contract on the day of expiration, but with American options, you can exercise at any time. So I found something pretty easy to understand to explain a gamma squeeze, and then we are going to go over and apply this to AMC's option chain. So the squeeze can begin when a large investor, typically referred to as a whale, buys short-dated call options in a frenetic pace of stocks that they typically own. The banks or brokers that sell the call options will typically buy the underlying stock, so they have very little or no net exposure. So what this essentially does to the bank is that when they sell an option, they are essentially shorting a call option. So in essence, this is an unlimited risk options trade. So what they then go do is they buy 100 shares of stock. Let's just say it's one contract. So the bank then sells me, or an institution sells me one options contract. And in order for them to be able to hedge or mitigate their losses, they go out on the open market and buy 100 shares of that stock in the event. So they're hoping that if the stock goes up past the actual strike price, that they will already own the strike. And if the individual who bought the stock, bought the options contract, which in this situation would be me, they would be able to deliver the shares to me without taking a very significant loss if the share price went way higher than they were expecting. So we can see down here the option purchases force the dealers to buy the underlying stock, which can push the share price higher. If pulled off, this creates a positive feedback loop, thus can drive the underlying stock price higher for a period of time. In a roundabout way, the dealers must buy more and more of the underlying, and all said and done, this is a gamma squeeze. So essentially what these institutions are doing are creating a covered call position. So they are covered on this trade, but they are still able to offer the trade to another individual that wants to buy these options. Now, there are a couple of other ways that they can hedge these positions for a lower cost. They could buy deep in the money calls and then exercise them at a later date, but that's a little bit more complicated for this, so we're going to get into that maybe in a later video. But one of the key things that we need to see in order for a gamma squeeze to be possible is 1, a very low time to expiration, and 2, a significant amount of open interest and volume on the option chain for that expiration date. And when we come over to AMC's option chain, this is going to be the April 16th, 2021 expiration date. And we can see that this $10 strike has an open interest of 57,384. That means that 57,384 contracts are being held in people's brokerage accounts at the current time, since the open interest is essentially defined as the amount of contracts that are out in the market that have not been exercised or closed. And we can see that yesterday, the volume on this specific strike was 30,307. Now, that is the volume, so that is total buys and sells. So this number right here, this 57,384, is going to change by the time you are seeing this video. It could go a lot higher, which would suggest a gamma squeeze is possible if AMC is able to get over this $10 mark. Now, this is going to be very important to see, because typically when we see these expiration dates, these big monthly expiration dates come up, we see a lot of volatility and a lot of price manipulation going into that expiration date. So not Thursday, but I think Friday, we are going to see a significant amount of volatility. The institutions that are short AMC are going to want to push the price of AMC below $10, and all of the retail investors and some of the long whales that we have seen come in are going to want to push AMC above $10. So now let's go over and take a look at some of these numbers right here. So this is going to be the short shares availability. Now, I've seen a lot of people talk about this on not only the Reddit forums, but on some of the other forums as well, in the comments of Weeble, StockTwits, and in some YouTube videos as well. And when you look at this short shares availability, we see that at the current time that I am recording, there's only 25,000 shares available to be shorted. So that would make you think, well, there's no more shares to be shorted. There could be some manipulation on the over-the-counter markets, but it's going to be very blatant and the short squeeze could come. Now, that's not entirely correct, because as we can see here, these numbers are coming from Fintel. Fintel is not an overarching image of what is going on. They really don't have all of the brokers, so it's entirely possible that there are other brokers out there that are not reporting to Fintel that have many more short shares available. And we can see that over here, that the short borrow fee rate is going to be based off of the short shares availability. Just think of supply and demand. If there is a lower demand for, or a lower supply of something and a higher demand, the actual fee that you are going to need to pay in order to enter a short position is going to be higher. So it's possible that the short borrow fee rate is going to be above or around 9.65%, but it's also possible that it is not. And that's a very common theme that we have seen with AMC time and time again, that all of these data sources that we see are giving us a decent picture of what is going on in the market, but we can't know for sure. And the reason why we can't know for sure is a wide variety of things. Specifically, the short interest numbers are self-reported by these institutions, and it is in their best interest, especially in this situation, to come out and blatantly lie to the regulatory institutions about how large their short position is. We actually had a situation like this in Turkey about a couple of weeks ago. I think it might have actually been last week, where Credit Suisse and a couple of these other institutions got popped for naked short selling and predatory short selling, and the actual fine that they had to pay was less than $1 million. So this is really nothing to them, and if they can use these manipulation tactics and create a lot of confusion among the retail investors, they think that they are going to be able to win. But we've seen a lot of great due diligence, and a lot of people are very confident in AMC's potential, especially for a squeeze. So hopefully you guys were able to gain a better understanding of what the possibilities are of AMC going into the end of this week and beyond, and learn something new about this short borrow fee rate numbers and how we really don't know what the exact numbers are because Fintel is not representing and giving us the full picture. So that is going to conclude this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. Again, it costs you nothing to do it, but it really helps me out a whole lot in getting this information out to as many people as possible. And if you enjoyed the information I provided for you in this video, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys had a really profitable day, and I'll see you guys in the next video.